But yeah, there's only one kind of company in the market that actually can't stop paying a dividend, and it's my favorite kind of company. It's actually, I'm pretty sure it's one of Brian's favorite kind of companies too, and they're real estate investment trusts.
Okay, yeah, so those are the ones where they're basically legally obligated to pay you.
They are legally obligated. So they're a real estate investment trust is technically not a company. Right?
Right.
It's not like your traditional like incorporated or LLC or whatever. It's a completely different structure. And basically, they have a lot of rules that they have to follow. They have to have a certain number of shareholders outside of like, the immediate insiders of the company. They have to, the majority of their assets have to be invested into some form of real estate, be it buildings or land or, farmland, whatever. But the really cool part about it is that by law, they have to pay out 90% of their pre-tax profits to shareholders. And so that's one of the reasons that they have to have so many shareholders outside of the insiders so that like you can't just use this structure to make yourself rich.
Gotcha.
And you can still got to be sharing that. And it's really like it was basically the idea behind it was to sort of democratize real estate investment back in the 1930s. It was really difficult to invest in real estate. Only super rich people could. But like, if you can scrape together $10, $15, $20, you can buy a share of a real estate investment, like a real estate investment trust. And then technically you are invested in that real estate. You are a partial owner of the real estate that they own, and they're obligated to pay you, those dividends that they get or some of the revenue that they get from renting that real estate out. It's like being a landlord, but not having to deal with tenants.
Yeah. And you can buy these on the stock market just like any other stock.
Just like any other public company, but they have to follow somewhat different rules in order to maintain that REIT status. And the nice thing for the company about the REIT status is that because they're paying out so much of their pre-tax profits to investors, they don't have to pay taxes.
Right. So that's kind of the deal. Yeah.
Yeah. So if they do cut their dividend, then all of a sudden they lose that favorable status, and their tax bill goes up, and nobody likes to pay taxes.
No, everybody's
trying the whole country trying to not pay taxes.
Yeah. Everybody's trying to limit that tax liability while still getting the income.
Yep.
So that actually brings up something else we talked about